Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Uh-oh, what day is it? It's Hump Day edition of the Daily Market Commentary. Welcome, everybody. I am Chuck Fulkerson, your host. We're going to do what we do each and every day, looking at our futures markets from a breakout and reversal trades from an educational perspective. If you're new to the channel, click that subscribe button and hit the notification bell so you get the updates as they come available. So let's go ahead and dive right in. S&P this morning, we're up about 12 points. Now, we'd found a little bit of a reversal level yesterday. Pretty big sell-off happened early in the morning, came down to our reversal level. It did pop just a smidge below. Now, depending on where you place your stops, you may or may not have gotten stopped out on this. Realistically, you know, when you've got a little level right here this close to a pivot, you're going to want your stop to go outside of this pivot. Now, I can understand if you put it down in here. Now, in reality, that's less than half a point, right? You got to give yourself a little bit of wiggle room. And so this one is continuing to move up from that level. We're getting a nice little move out of that level. However, it's completely been exhausted. And on a 4-hour, it just kind of keeps us in the same, ilk. We're just kind of still chopping along sideways. So not a tremendous, change in direction one way or the other. And we are coming to an area where I think we could see another reversal back to the downside right in here. Now, I'm not willing to take that one at the moment, primarily because my big picture is still telling me to be a buyer. And if we get, another pullback, then this would be your next opportunity would be somewhere down in here. If we indeed get another pullback. Now, once again, you'd want to widen this whole area out. The zone may just be this area here, where we've got that little bit of basing before a nice little move higher, but your stop would be below that pivot, right? So outside of that pivot area. So that's the level that I'm going to look at for today. Keep that area in mind if we get a bit of a pullback. Now, there's a chance we'll get a bit of a pullback and a reversal. I mean, we're getting a pretty nice reversal candlestick right now off the 15-minute chart off of this level here. This was a pretty nice move down. I'm not a big fan of the time of day that it was created or formed, but I do like the fact that we're getting a bunch of high wicks coming into an area of resistance. That tells me that there's selling pressure that's kind of built up in each one of these areas. So it's a little bit higher risk to take the short on that, and by the time you guys watch this video, there may be a better opportunity for the long. It does take a few minutes to render and have all that fun stuff happen. All right, so in the NQ, now in the Nasdaq, this level here, significantly stronger level. Now we had a couple of different areas in the Nasdaq that have come close to getting filled, primarily these demand areas here down below, but we didn't get into it yesterday. Still a valid level. We caught this long last week, and this level is still valid, but it's a confirmation style entry. And so now I'm looking at this area up here for a potential short. So if you're going to get short today, I think your better short is off this Nasdaq area right up in here, 67.42 by 67.63. If that's a bit wide for you, what do? Well, go and trade the options position, right? Go trade the options on QQQ as a proxy for the NQ trade. Next, crude oil. So in crude oil, I had a potential reversal trade. That reversal turned out to be completely a breakout. It's as we broke out above, retested that area, and this is something that we will see, is oftentimes old supply will become new demand and kind of flip around and flip through, and that's what we had here. Now, this was an unexpected kind of parabolic movement into an area which was pretty decent supply, but we were unable to stop it. It kind of just blew right through. But now it sets up more trades going forward, right? I mean, now on the 4-hour, this looks a lot like the S&P as far as just it's still in an upward position, but it's kind of chopping along, right? Losing a bit of steam, a little bit of momentum. We do have some supply up above us. We're just not there yet. So I think the right trade for this one at the moment is to just kind of be a little bit patient and hold off for a smidge. Now, I will take and wrap some lines around this area down here, which was the origin of our last move higher. And, oftentimes you'll see those big speed candles get retraced back through. So this level will be one that I'll keep an eye on, 52.54 by 52.32. Gold. Gold, we had our breakout trade. That breakout trade is continuing to run. I set up another one, and the second breakout trade is also continuing to run. So we're definitely seeing gold continue its move higher. We are coming into, on the bigger picture time period, an area of supply or resistance, right? So off the daily chart, we're coming into a bigger picture of supply or resistance. Now, what I have seen oftentimes is this daily chart, this was an area of resistance, and price pulled back from it, but then eventually went through it. Let's see, moving it up over here. Oops. We had another area of resistance just above there, right here. So this was an area of resistance, which then the daily chart hit it once, pulled back, and popped through it. So what you can notice is that on daily charts, we'll hit these areas of resistance. Here was the area of resistance. We hit it, we pulled back, and then we popped through it. So when you think about impulse moves and corrective moves, this impulse move is to the upside. So there's a chance that we'll get a pullback over the next couple of days in gold. But then I think ultimately that level is going to get blown through. So those of you that took on the hourly chart the breakout, it's not a bad idea to have your stop and maybe move it up underneath the last area of demand, maybe this 1315 area. And that would be a good place to kind of protect yourself and have a little bit of demand in place. Next, bond market. So looking at the bonds, our 10-year note, we are just kind of still in between our levels, the areas that we had talked about yesterday. So not a whole lot to add in terms of the bond market. There's not a whole lot necessarily that I want to add to that. There's no reason to jump into any trade for lower probability opportunities. The Aussie. So the Aussie yesterday we talked about reversing to the downside, and price hitting that blue line and coming back down, which it did, came back to our level of opposing area of demand and then rallied back through. So that actually was a nice little breakout trade, which is now starting to head the other direction. Well, now I've got this little wick over wick potential reversal area. So I'm going to wrap my lines around this little wick over wick potential reversal area. Now this is not a great setup because we didn't get a strong move away. So I'm going to make this a confirmation style entry. But I wouldn't be too mad if you decided to make it as a limit entry because, sometimes you'll see those are decent reversals. Time of day is not great. Also, the move away is not amazing either, but it is still, structure-wise, it's okay. The euro, same level down below, still applies. I've got nothing really that I want to add to the euro. And then in the Canadian, yesterday we had seen a little bit of an area that I thought we'd get a bigger breakdown. We got somewhat of a breakdown from that level, but not a very strong one. But we're still below our reversal points. Last and certainly not least, Great British Pound and the Japanese Yen. The Great British Pound, we had a confirmation style long set up, and we came into the level, we based, came into this, so you got to go look at it on a 15-minute chart to really get a clearer picture. So we came into the level to activate the trade, popped out, came back down, popped out again, and then fell through. So based upon how, what time frame you chose to enter the position, you may or may not have followed the 6 candlestick rule. This was on an hourly chart, so technically that would have to be 6 candles on an hourly chart before I would be willing to forego the trade, and it was actually only 4 candles before the stop out would have occurred. Now, that being said, once that happens, it's a brand new picture of the old demand area acting as supply, and that's what we're seeing here. Now that's simply because now there's no orders left over from here, but there's enough traders and algorithms that go and add their orders to the queue that are kind of helping to propel those moves. And then in the Japanese yen, I'm going to say what I've said every day for the past 3 weeks. We're still in between our major levels of demand and supply, so not a lot of movement. So, all right, hope everybody has an amazing trading day. If you've got any questions, please send me an email, support@tradersarmy.com. If you're a Traders Army subscriber, tonight we have our, at 7 p.m. Central is our live Q&A session. So bring your questions, and we will make sure that we review those with you. Until tomorrow, everybody, we'll see you soon. Later.